Right now, there is a sector in the stock market where the companies managed to rally over 1000% in 12 months. Not 10%, not 100%, 1000 in the span of a year. And guess what? These stocks have seen a massive correction from their highs, and the opportunity is here. Governments around the world declared it a matter of national security. Billions of dollars in public funding are being directed straight towards it almost overnight. And the strange part, every single company at the center of this, every single one that is a pure play, is losing money. Not one of them is profitable, and yet Wall Street keeps piling in like it's the most obvious trade of the decade. And I will not keep you waiting to tell you what the sector is, and we will get to the individual picks in a moment. It's quantum computing, and by the end of this video, you will know exactly what's real here, what's hype, and how to think about it before you put a single dollar in. I'll share the exact setup, the exact opportunity, the risk of course, and my plan for it. Welcome to the trade setup. So let's start with the basics, and I'll try to keep this as fast as possible. Classical computers, the one you're watching this on right now, they store information as bits, a 0 or a 1. Quantum computers use qubits, and a qubit can exist as a 0, a 1, or a mix of both at the same time. That's superposition, and you can think of it as a coin that is spinning in the air. Yeah? Imagine this is spinning. While it is spinning, it isn't heads or tails. It's both at once, and it only becomes one or the other the moment it lands. That's roughly what's happening inside these machines at a scale that a normal computer simply cannot touch. When you link enough of these qubits together, the number of possible states doesn't grow one at a time. It grows exponentially, and in theory, that means problems like drug molecule simulation, material science, cryptography, complex optimization, all of that could get solved in a matter of hours instead of thousands of years. And that's the pitch. It's been the pitch for decades. So why is it different now? Well, three things collided here, and I want to walk through all of them. One, the money. Yes, of course. And they've given a lot of it back since. We'll get to that in a moment. But this sector has already proven it can produce 1000% moves. IONQ did 1000% in a span of 12 months. The others did 4000%, some of them even more, I believe. And I believe one of them may have done even more than that. But the idea is, this is reproducible. It's not a one-time thing, it's a pattern that can repeat. Then, secondly, government policy. Back in May, US added $2 billion worth of these stocks to their books. They invested in 9 different quantum companies under the CHIPS Act. And it didn't stop there. In June, 2 executive orders followed, with actual deadlines attached. A research-grade quantum computer by 2028, and the federal systems to be moved to quantum-resistant encryption by 2031. They didn't just fund it, they put a clock on it. And there is no choice. They need to achieve this. This isn't happening just in the US. In fact, China invested $15 billion into it, into quantum computing. My understanding is that they even have a quantum satellite in the orbit. So there is no choice here. This has to be done. Then number 3, real commercial value. This isn't just lab talk and future promises anymore. Fortune 100 companies are writing real checks for this right now. AT&T has an active partnership. Sienna is co-building quantum-secured communication systems, and national labs and universities are buying actual hardware, not just funding research giants. Put those three together, and you get the kind of narrative-driven rally that allows these stocks to still see massive extensions. But a narrative is only as good as the companies behind it. So let's meet them. These are the main ones I'm watching for the opportunity. 3 different players, 3 different focuses. IONQ, D-Wave Quantum, and quantum computing. So IONQ builds trapped ion hardware. They're the most aggressive of the three when it comes to becoming a full platform. They just bought a chip foundry, Skywater, to bring manufacturing in-house. They're looking to get vertically integrated, and the R&D spending, massive. $125 million in a single quarter, up over 200% year over year, funded by roughly $2 billion that they still have left in cash, with essentially no debt. They're the closest of the three to a sustainable revenue that is growing 700% year over year. And not only that, but the losses are shrinking relative to that revenue, not widening. Then D-Wave Quantum, we are looking at the oldest player here. And I mean the oldest by a lot. Their annealing quantum computers have been commercially deployed since 2011 with real customers like AT&T. And that is why Wall Street treats it as the safe pick. A rare consensus strong buy across different analysts, but next to no debt. Now, safe isn't the same thing as close to profitable. It actually has the worst loss to revenue ratio of the three. And that is as annealing solves a narrow category of problems, yeah? We have a narrow use case. The revenue comes in unpredictably, lumpy chunks, which is probably why this past January they spent over $250 million acquiring quantum circuits. This is to add gate model computing on top of their original annealing bet. Then we've got quantum computing, as you've seen earlier, ticker symbol Qubit, and they build Photonics hardware. But they've quietly built a second business worth watching, which is quantum secured communications. That Sienna partnership I mentioned earlier, right? Its tech is meant to protect data before quantum computers get powerful enough to break today's encryption. They're the earliest stage company of the three, but they're using a large cash pile, just under $1 billion, to buy their way into the space. Interesting fact, they use light, actual light, for their cybersecurity encryption. That sounded ridiculous to me, and I thought it was a very interesting fact. One of the bigger three names in this space, and you'll notice I'm not covering Rigetti computing here. I'm sure you've been asking this ever since you saw my picks. It's one of the three big names in this sector, yeah, above Qubit. And I have nothing against them as a company. I just don't like their structure. The stock doesn't present the same clear opportunity I'm seeing in the other three. So this is not where my attention is right now. It simply doesn't provide the same clear levels of support that I see in the others. And it's actually rallied the most out of all four. It may do it again, but that is not how I'm making these picks. Now, before we move on, I want to point something out. All three of these companies are spending more on R&D and more on acquisitions than they're bringing in. Normally, in a lot of industries, that's a red flag. But here, that might actually be a good thing, not a bad one. This is a land grab phase, and the technology, the customers, the relationships, the manufacturing capacity, all of that is still up for grabs. The company is spending aggressively now to lock in a technical lead before anyone else does. Those are the ones that could end up owning the space once it matures. Spending more than you make isn't automatically bad, it just means you have to ask, what is that money actually buying? Three very different bets, three very different balance sheets, but none of that tells you when to actually put money to work, and for that, the story alone is not enough. And this is where we look at the charts, but before we get there, let me explain why I even bother with this, because the story alone isn't enough for me to put money in. Yeah, a moment ago I told you that is why I didn't pick Rigetti computing. And first we have a high probability structure. When you see 5 waves up, followed by a 3-wave correction, you know that you are looking at a high probability pattern, according to Elliott wave theory. Such a high probability structure allows us to look for an entry when everyone is fearful, to look for an entry, an opportunity, where we know that as long as we do not get an invalidation, a break below the beginning of this entire rally, we know that we can still track an active uptrend that would build a large degree 5-wave pattern, where this would have instead been a wave 1, where from the wave 2 bottom, we are looking with high probability for a wave 3 to follow. And that wave 3 tends to be the strongest wave, the largest wave of the entire 5-wave structure. So this pullback, this three-wave correction I just showed you, is not a suggestion of a top, it's the market catching its breath. Now, the second point to what we can follow on the charts are clear levels of support. We could be waiting for the full invalidation for this structure to indeed fail, for the thesis to go out the window. But there are certain levels, Fibonacci retracement levels, that we typically expect to hold within such a correction in this wave 2. A chart tells you exactly where the probabilities start shifting in your favor, and just as exactly where they don't. Where the setup is fully invalidated and you're simply wrong. We know the beginning of the entire move, and when you're thinking of invalidation, you can think of it as a tripwire. You don't argue with it, you don't hope it's not really there. If the price crosses that line, the thesis is dead. It needs to start all over, but the setup that was tracked, full stop. And the third point that I want to make, and this is a big one, we have low risk and high reward. Now, don't think about this in percentages, forget I'm risking 20% or I'm risking 30%. Think in units. You could do it in percentages, but this is to simplify it. So let's say you're risking 10%, but really we are looking at a 1 there. And you could gain a potential of 30%. We are looking at a risk-reward ratio of 1 to 3. That is excellent. And on setups like this, we are not looking at 1 to 2 risk-reward ratio. 1 to 3 maybe. You're talking about 7, 8, sometimes even 10. Yeah? A 1 to 10 risk-reward ratio. With such a setup, you would only need to be right 11 out of every 100 trades, and you would be profitable. Now, full disclosure, these are not promised returns, and having such attractive risk-reward ratios does imply significantly higher risk, significantly lower likelihood of it to work out, which is why risk management is going to be extremely important, and I will share that with you a bit later in the video. What I shared with you right now, that's the difference between speculating on a story and having an actual edge. And it's why I think about this on a specific time frame, which I'll walk through with each chart. So let's have a look at them. And I'm starting with IONQ here. I almost don't even care what the rest of the chart is doing. I'm focused here on the smaller time frame. I'm looking at this daily chart from the lows on the 30th of March, from which point I identify an initial 5V move to the upside. And this structure alone, because it's an initial 5V move to the upside, tells me with high probability that after a 3-wave correction into the area of support, I can look for at least another 5V move to the upside. Could be more than that, but at the very least, this would be the expectation to have for a setup like this. And the support I'm watching for this setup would be looking at a correction within the wave 2 here to hold the 78.6% retracement at the very least. This sits at $32.40, and it has successfully managed to push exactly to this level before seeing the latest bounce this week. Now, full invalidation, as clearly stated earlier, sits at the beginning of this move up, the beginning of the rally from the 30th of March. The wave 2 correction cannot retrace more than 100% of the wave 1. This means that if in this decline we see the break below this level, this setup will no longer exist. This setup will have been invalidated. Now, something important to notice here. Already, if we get the sustained break below the 78.6% retracement, the probabilities of this setup will have shifted. It can see a brief break, it's already done that actually, and it could do it again, to be honest, based on the internal structure here. I do see the possibility of one additional low. And this is a bit more advanced, but I'm looking at the $30 region to maybe find a local low within the correction, within the structure, if it is to extend lower. Yeah, we could see this make another attempt to break lower, push into this region, and then see the bounce into the actual white wave 3. Now, what is the implication if we see an invalidation? Well, we would be moving into uncharted territory. The larger correction would have not been complete within this initial attempt of a 3-wave pattern. It would need to build a larger three-wave pattern, which would imply larger downside potential and no confirmation of any kind that we would see a reversal. So that is a high-risk region to be holding a position in the case of this decline. More than I would be able to estimate, but certainly a region to expect is this $20 area, yeah, down to about $18. We have some structural support there. And before we move into the next one, in the internal structure for this stock specifically, the area of resistance that I need to consider is for one additional low. In the scenario where the wave A would have bottomed here, the wave B would have topped in this region, and a wave C would be expected. Now, as you may know, a wave C always contains a 5-wave pattern. Right now, I can track this as a potential impulse, and right now, it could be a wave 4 that is in development. Within this wave 4, I would expect to not see a break above the 50% retracement. Why is that important? That is important because if we see a break above the 50% retracement, the likelihood of this being a wave 4 would be extremely low, and it would be a strong indication that a bottom within this white wave 2 would rather be in, which is why this orange resistance box up to $44.40 is the most important region to watch. This is what needs to be broken for the indication that the wave 3 is already in play. Now, moving on to the next one, as we do not want to spend an eternity on every single one of them, the wave quantum certainly has the most interesting structure of the bunch. I like this one the most, as it allows the most clear impulse to be clearly seen information even on a large time frame perspective. This stock allows me to identify this being a wave 1 up, a clear impulse. I'm looking at a wave 2 correction that could have bottomed here, and a wave 3 that could still be extending. In this wave 3 there is actually an additional extension that could be considered, but it's no concern for now. What the focus is rather, this being a wave 1 up, this being a wave 2 down, and having this as a wave 3 up. Why? That is important because this defines for me the relevant levels of support to track for this stock. This tells me where this wave 4 correction in white can go before seeing the reversal, and it tells me the levels it cannot see a break below, because that would be a strong indication that this chart is going to see a failure. And this is actually the large time frame story that we can consider for every one of these stocks, but this is not where the interest resides for me. No. I'm looking at the internal structure, where we have actually a very similar pattern with what we've seen on IONQ. I am looking at an initial 5-wave move to the upside, and I can already feel what you're thinking, that I'm either stupid or blind, because these are 9 waves up. Well, we have here a wave 1, a wave 2, a wave 3, 4, and a 5. How does that work? Well, you see, this wave 3 is an extension, and most impulses actually contain an extension, exactly one. That was also visible on the IONQ chart, but it is even more apparent here. And just as a side note, in the case of larger trends, we do actually see even 2 extensions, most typically occurring in the wave 3 and the wave 5, but this is on a large degree. Yeah, maybe something along this line of an extension. We actually see 2 extensions here as well. Yeah, we have this as a wave 3 and also this as a wave 5. So yes, we do have a couple of extensions, and even this wave 5 has 2 extensions, interestingly. But that is not the point here. We are looking at the actual setup, and what I'm seeing here are 5 waves up, which tells me with high probability that after a 3-wave correction into this white area of support extending down to the 78.6% retracement, I expect continuation to higher prices within at least another 5-wave move to the upside. Typically, I would like this to be a wave 3, in which case we could be looking at quite high levels to be reached. Remember, we are talking about quite favorable risk-reward ratios, and in the case of this stock, assuming a bottom would be in, I'm looking at the ideal target for the very next move to be the 138.2% extension of the wave 1, $56.40. So from the current levels even, not even the bottom, I'm looking down to invalidation at about 29%, something like that, and the potential of the very next move to be over 200%. Now, if I want to tweak my expectations, if I want to maybe move a little bit higher my stop loss, and I don't usually wait for a full invalidation every single time, I could be looking at a 1 to 10 risk-reward ratio within this very next move to happen. And this being a wave 3, certainly doesn't have to stop there, and it could see even larger, even further extensions than the ideal target. Now, within this correction, I am looking at a 3-wave pattern to already be in place. I actually like it a lot for it. I see a 5-wave move down within a wave A. I'm looking at a tiny wave B here and a wave C that could have already bottomed. The caveat, this wave C could still see extensions lower, technically. I actually prefer it not to. I could actually look at this wave A to have bottomed here and to have had a truncation. We will not get into that today, but we can assume the wave A had bottomed there. The wave B would have topped here, and we are looking still at 5 waves down to be potentially complete. Once again, within a truncation in the wave 5 of the wave C. Is there something else to consider here? Well, actually yes. Firstly, even within this count, this wave 5 could see an extension. It could be the case that this would be a wave 1 down, this would be a wave 2 up. We would get then a 3rd, 4th, and a 5th to complete the pattern. Doesn't need to see invalidation, a break below $12.70. Doesn't need to see a very sustained break below the levels of support. And the other idea, which would define my most important levels of resistance actually, would be that the wave A had bottomed here. This would have been the B wave top. Now we have a count, a structure that actually aligns perfectly well with the structure that I've shared on the IONQ chart. Then this would have been a wave 1 down, a wave 2 up here, a wave 3 down, a wave 4 up, and a 5th wave to continue to complete this structure. So we can define quite clear levels of resistance that it still needs to break to strongly indicate that a bottom would indeed be in. I'd be watching up to $20.70, but certainly the most important level here is going to be the 38.2% retracement, $19.50, where it has actually previously found this top, before it got rejected and generated this additional extension, right? It is the ideal target for the wave 4. Then what happens if we see an invalidation for this stock? If the structure, this 1-2 in white, cannot hold, the implication would be that this extension within the wave 3 could still be happening, but the wave 4 would not have a bottom in. The wave 4 would need a larger A, B, C structure, which would likely lead to much lower prices, looking here at $10, maybe even $6 to be reached. The other implication would be that this is not that much of an extended wave 3. Not necessarily a problem, I would just assume the wave 2 had bottomed here. But again, the correction within the wave 4 would be expected to be larger. In this scenario, we would have no internal wave 3. The wave 3 would have topped here, and this wave 4 would be currently in development. Not really of practical relevance, but useful in understanding that after getting one additional high in this interpretation, we would get a larger 5V move to the upside, which would imply a larger correction within the wave 2, which is typically the sharp correction, the deeper retracement. Now, moving on to the next chart, the next opportunity and the last one we will present today. The most speculative one of the bunch, yet somehow has one of the most interesting setups here. So I'm still looking at the smaller time frame. I'm still looking at a 5V move to the upside to have occurred. I am still looking for an identical 1-2 setup where once again we see the last level of support has been reached. The correction we have in this area is a little bit more complex, not one I would personally bother with. I would certainly be using a more speculative allocation in this stock and maybe even allow a full invalidation. What is interesting, however, is that this stock is the one that has a double 1-2 setup, where I've already shared this setup a long time ago, where we've had an initial 5 move to the upside here, a perfect impulse. We see a perfect 3-wave correction has taken place, and we have, in a smaller time frame degree, another 5 move to the upside. This stock has already found a bounce from the 78.6% retracement once, and it has seen a quite decent rally. We are looking at an over 2x from the lows, and this seems to be happening again. So the opportunity is clear. Probability shift, the 78.6% retracement, $7.40. We already pushed into this level a couple of times, and we even see a stronger bounce, which is actually nice, healthy. Full invalidation, sitting at the beginning of this yellow wave 1. We are looking at $6.20, around that area. So if we see that level broken, the thesis has failed and this stock would enter freefall. I can consider this wave 2 to be complete. I do see a 3-wave pattern, but mostly within the area of a triangle within the wave B of the ABC structure. Could be a couple of counts, but certainly we do not have a clear path, a clear correction that shows a bottom, and it would actually need to push to quite high levels. I do believe that if most other quantum stocks will fail, this one will follow. If they will succeed, this one will likely follow as well. But it does certainly contain a bit more risk, which is why I'm thinking invalidation may be a more relevant exit here. Now, before we get into exactly how I'm playing this, let's look at the risk from a fundamentals perspective. I want to slow down for a second because everything we just covered, the growth, the setups, the momentum, none of it means anything if we ignore the other side of this trade. And let's start with the valuations, which are quite extreme. And before I give you the numbers, I want to explain something because this trips people up all the time. These companies are not being priced on what they're making right now. They're basically making nothing. They're being priced on what the market thinks they make 5, 10, 15 years from now. And that's not some unique quantum thing, by the way. That's just how growth investing works. That's the same logic that priced Amazon for years before Amazon made a real profit. You're not paying for today's earnings, you're paying for a projection of tomorrow's earnings, and the problem with that projection is that it can be wrong in either direction. So when you're paying based on a story about the future and not a fact about the present, that's an inherent risk. And at the peak of the dot-com bubble, even the most overhyped stocks, Amazon, Cisco, Microsoft, they topped out around 30 to 50 times sales. And today's quantum pure plays are trading at price to sales ratio in the hundreds. And that is a completely different universe of pricing. Then there's of course the timing. Some industry leaders may think useful real-world quantum computing is a decade away. Independent academic research puts serious commercial impact closer to 2040. So yeah, a bit longer than that, 5 years longer. Now, nobody actually knows, and the current prices are betting hard on the earlier end of that range. So let's call it what it is. Speculation, yeah? Pure speculation. Not investing in the traditional sense, speculating on a technology that might not pay off for a long time, in companies that are not profitable and may not be for many years, many of which could fail. Then this isn't hypothetical volatility. Some of these stocks already dropped 70% from the tops. Yeah, this has already happened. And personally, I actually look at this as an opportunity as well. But what will you do if it drops another 70%? Are you prepared for such a possibility? So that's the deal you're actually signing up for here, which is exactly why how you size this matters more than which company you pick. So here's what I'm doing. I'm looking at a small position. Now it says 5% here. Doesn't need to be 5%, and it may actually be a bit large for most people. I don't know that I will be allocating 5% of my portfolio to this. I probably won't. But it is important to clearly define what you're risking, to clearly define where your exit is. Because if you're buying up to 5%, yeah, and you just hold it, allow it to go to zero, you may end up feeling quite bad for many years before and if they even recover. Now, given everything we just walked through, the valuations, the lack of profitability, the wide range on when this actually works, this is not a position that I'm taking as a core holding of my portfolio. This is small speculative. And I'm not doing this up to 5% for every individual stock. No, I'm talking about a sector-wide position, so this would be combined across all of the stocks that I've shared here today. Because this isn't really 3 individual stock picks, it's more of a sector-wide move, so they really tend to rally together, and when they sell off, they do tend to sell off together. So yes, the exposure needs to be spread across the entire sector, measured as a combined position, not 3 separate bets stacked one on top of the other. Then if the setup gets invalidated, yeah, we defined earlier what invalidation means. It likely means that the correction pushes even lower from there. And that's the line I'm respecting, no matter how good the story sounds. And that's the discipline this sector demands, because the story is genuinely exciting. It sounds incredibly fascinating. Quantum computing might be one of the most important technologies of the century, and the government backing is real, the engineering progress is real, but important technology and good stock price today, those are not the same claim. And right now, there's a real, well-reasoned argument for both sides of that gap. And in the end, I'm not a financial advisor, and nothing in this video is a recommendation to buy or sell anything. I do encourage you to do your own research and only invest what you can afford to lose, especially in a sector this volatile and this early stage. Now, if this breakdown was useful, hit subscribe and let me know in the comments, are you long quantum, watching from the sidelines, or staying far away? If you want even more opportunities from me, stay tuned for the next videos, or even check out the Patreon where I get to share a lot more of what I'm seeing in the markets. But for now, these are the levels, this is the trade setup. I hope you enjoyed the video, and if you did, again, don't forget to subscribe, leave a like, and if you enjoyed the content and want to support it directly, check out the channel membership, and I'll see you in the next one. Bye bye.